Hello, everybody. I'm sorry, we are having a little bit of technical difficulties. Struggling with that work from home life right now. We're trying to get everything together. If you can just give us a couple of minutes. Hi, guys. We are having some issues with GoToWebinar's screen share. From what I understand from Jake, it's just a black screen on your end. So if that's not the case, if you could use the messaging function to let us know that you can hear and see, and we'll get started. Otherwise, we might have to postpone a little bit. Thank you so much for bearing with us while we try to figure this out. Okay, can everybody see that now on Jake's? Going to share from his side. All right, thanks for hanging with us for 9 minutes. Sorry about that. Um, that was not fun, but we'll get right into it. So we're going to be talking today about all the guidances that are out there for banking cannabis related businesses. First of all, thanks for joining us today. We were doing monthly webinars earlier this year and we stopped doing them in April. We knew that you guys had a lot on your plates, trying to roll out your own pandemic plans, also with PPP loans. So we took a step back. We didn't want to be one more thing on your to-do list. And we are kicking it back off this month in August, and we'll be doing it monthly going forward. This one is a little on the light side, so it's okay that we had a 9-minute late start here because there's just not a whole lot of guidance, right? But we're going to go through what we have. But we wanted to use this opportunity to reconnect with our community, and we're hoping that you guys can give us some feedback and some ideas of what we can cover in the coming months so that you guys get what you need out of this webinar series. So please use the chat box or email myself at jessica@veraleaf.io or jake@veraleaf.io with your recommendations for topics. So we will get it kicked off. We're going to talk about federal guidance, and we're also going to talk about some state level guidance today. So Jake, if you want to go to the next slide, please. So these are the guidances we're going to talk over today. The last time I spoke on this, there was very limited guidance, and we've gotten a few new ones this summer. So that's always nice. There's been a kind of a whirlwind of BSA guidance lately, not necessarily related to cannabis, but we had a PEP guidance come out this week, and then last week we had a statement from all the agencies and how they are going to decide whether or not cease and desists are appropriate for BSA related findings. And then we also had a FinCEN guidance about how they enforce the Bank Secrecy Act. And that was all within the last 10 days, I would say. So we've gotten a lot of guidance lately. Our most recent hemp or cannabis related guidance was in June of 2020. So we're going to talk through what we have and how they all kind of tie in and what that means for your program. So we'll go on to the next slide. Okay, so providing financial services to customers engaged in hemp-related businesses. We got this guidance in December of last year. It was long awaited. People were asking for some sort of guidance that was different from the FinCEN banking marijuana businesses guidance that is from 2014. That was more specific to these hemp businesses because the industry could see that there was a big difference between marijuana and hemp, and they wanted the agencies to recognize that, and they wanted a little bit of guidance and really a green light for banking these businesses since they weren't federally illegal like marijuana. And the agencies answered that request with this interagency guidance back in December of 2019. It wasn't the beefiest guidance, but it did shed light on a few things that were up in the air in the industry, and it promised a deeper dive from FinCEN that we did end up getting in June of this summer, and we'll cover that one next. So this guidance, it did reiterate that those marijuana-related SARs are not required for hemp businesses that are only involved in hemp. Previously, there was an NCUA guidance that did state that, as well as a couple of state level guidances, but we wanted to hear it from the agencies, and we got that. Basically, they said you only have to file a SAR if there's indicia of suspicious activity, just like any other business. Now, there's always going to be that gray area when you're dealing with businesses that straddle the fence, that work in all of cannabis, right? And there's the FinCEN guidance cleared that up a little bit, and we'll talk about that in a second. But for the most part, you're not filing those SARs. Now, if you become aware that what you thought was a true hemp-related business is involved in marijuana, and you close that account because your policy doesn't allow for you to bank that business, then you might have to file a marijuana termination SAR. So keep that in mind. But that was really good news that this guidance brought. And essentially, it just laid out, you know, that hemp is legal. It's legal at the federal level. and that banking them is really a risk-based decision for the financial institution. And if you would like to bank them, you just need to make sure that your program is updated and that it's designed in a way that you are matching the risk, your controls match the risk that you're bringing into the financial institution. And you're treating them like any other business, doing risk-based due diligence. One big thing from this guidance, it was very agricultural in nature. It didn't talk a lot about CBD. There was a footnote at the bottom that mentioned that the FDA is the governing authority for CBD, but it was mostly focused on the USDA's jurisdiction. And I think a lot of people get confused with what the USDA has federal jurisdiction over. That is really only the agricultural piece, only somebody growing hemp or a producer, a cultivator. Those words are what fit under the USDA's jurisdiction. A processor, though at the state level might be licensed by the State Department of Agriculture, is not technically under the jurisdiction of the USDA. The same as a manufacturer, and then also CBD does not fall under USDA. So I hear a lot of confusion around that when I'm out in the marketplace. I hear people say things like, oh, we need to check their USDA license. Well, it's very unlikely that one of your customers is going to have a USDA license. The USDA does license, but only in states and jurisdictions that are hemp is legal and they don't have a USDA approved plan. I think there's only one state so far that has decided to just opt for their participants to be licensed through the USDA. It's much more likely that your customers are licensed through a State Department of Agriculture. So just remembering that and remembering that there are other licensing authorities that might be involved at the state level for things outside of the agricultural bubble in this industry. So this guidance in particular is very focused on the agricultural side of the industry. So it leaves a couple of holes, but it does give the green light for the fact that hemp is federally legal and that you should feel comfortable opening your doors to them if your program is ready for it. So then we had the FinCEN guidance, and Jake, you can switch over to that. That came out in summer of this year. Everyone's been very busy this summer, so you might have missed it. But this is that promised FinCEN follow-up that was talked about in the December guidance. So it's a supplement to that guidance. It doesn't replace it, it supplements it. And again, it's pretty agriculturally heavy, but it does give a little more meat than the December guidance did. So one big thing that caught a lot of people's eye on that second bullet, so it says for a grower, and it specifically says for a grower, the institution can confirm compliance with legal and licensing requirements by either having their customer or prospect attest to the fact that they have a valid license or getting a copy of the license. And then it says basically, based on the risk level presented by that prospect or that customer, additional due diligence may be appropriate. So other due diligence examples might be getting testing reports, getting annual renewals, corresponding directly with the licensing authority to verify that the license is active. But on the baseline, for a very low risk prospect or customer, all they're requiring out of you is that you have your customer attest that they're legally licensed, or you just get a copy of that license. So it's pretty light due diligence, and it takes a little bit of the burden off. I think that also implies that growers are lower on the risk spectrum, right? So a CBD company, that's probably not enough. A manufacturer of consumables, maybe that's not enough. So just making sure that you have a robust risk scoring system that accurately assesses risk at the front end, and then you have a well-designed program that takes your staff and your individual frontline employees through what is required of them in certain situations for due diligence, and make sure that that's done on an ongoing basis. So like any other customer, to be able to properly identify that risk, you have to understand the nature and purpose of the customer and their relationship with you. What is their business and how do they want to use the financial institution? How are they using this account? That helps you develop the customer risk profile. And then of course, your suspicious activity monitoring, that transaction activity, alert activity, case activity, SAR activity, other ongoing monitoring helps you keep that risk score up to date as the relationship evolves. And then maintaining updated customer information, and that's on a risk basis. The guidance goes on to talk a little bit about when SARs are required or when they feel like SARs are required, and there are some examples. So it reiterates that FinCEN does not expect marijuana-related SARs for hemp businesses. It gives some examples when there might be indicia of suspicious activity. Some of those examples mirror those FinCEN red flags from the MRB guidance. For example, if the hemp business is engaged in production in an area where hemp is illegal, if they're using the license as a cover for money laundering, those two bullets in this guidance are verbatim red flags in the MRB guidance. So very similar thought process for true marijuana here with hemp, and also really for any customer, right, that presents a higher risk profile. Are they operating illegally? You probably need to file a SAR. Are they using their license or their business as a front for money laundering? You need to file a SAR. So nothing new there, nothing earth shattering, but it was nice that they provided some examples and that they did align with other guidance. There was also a piece in this guidance that I really liked that they highlighted, and it was around the commingling of funds. So if you have a business customer that does have another business that's dealing directly with marijuana and they're not commingling funds, and you can track their funds separately as a financial institution, then you do not have to file the marijuana related SAR on the hemp business. That marijuana guidance would only apply to the marijuana related parts of the business as long as you can keep the funds separate and they're not commingled. So that was a nice addition as well, giving some clarity to a much discussed gray area in banking this industry. So we'll go on to the next slide. So this is a dated guidance compared to the other two that we just talked about, but it was really the first federal guidance we had on how to bank hemp businesses. It was out of the NCUA, so it wasn't banks, chartered banks wouldn't normally pick up an NCUA guidance and look at it for how to run their compliance program, but this guidance is really, really well written. And even though it predates those two other guidances by almost a year for the June one, it's still very relevant. And I always direct financial institutions, whether you're a credit union or a bank, to check this guidance out. So like we all know, right, it steps out and it says, hey, if you want to bank these customers, that's up to you as a financial institution. You need to make sure that you do a risk assessment. You need to make sure that you understand the nature and the complexities of this industry. You need to understand the dynamic legal landscape. And you need to make sure that your program is adapted to all those things. Meaning, if you're going to serve 5 different states, you need to know all the laws for licensing under those 5 states and maybe even localities within those states. There are states where licensing is required at the municipality level for marijuana specifically. So understanding that and making sure that your program and your due diligence adapts for the geographic areas you're serving. So if it's a hemp grower in Texas, we know we need this type of license and we ask for these 2 other things. If it's a hemp processor in North Carolina, we know we need this registration and we ask for these 5 documents. Making sure that you understand the legal landscape and then adapt your program to it. This guidance also was the first to say that SARs weren't required. I mentioned that a little bit earlier, but that was really exciting news back in August of 2019 because we think there's gray area now. This time last year, there was so much gray area that's been since very clear, it's been cleared up. But so that's why I like this guidance, because it was such a trailblazing memo out of the NCUA. And it also covered lending. None of the other guidances on the federal level have covered lending. The big things that NCUA touched on was, you know, you have to consider safety and soundness standards. You have to have sound underwriting, but think about these things. And the 3 things they talked about was management's experience being one of them. There's a lot of bandwagoners in this industry. There's a lot of, you know, gold rushers that think hemp is the next big thing, and it might be. But because of that perception, there's a lot of individuals getting in on the business that aren't experienced. They don't know how to grow a plant. They don't know how to properly process. They don't know the complexities of testing. And as such, maybe that business isn't going to have the longevity like other businesses that do have the right personnel and the right experience on staff will have. Maybe they're more likely to lose their license because they don't know how to grow THC under the level. So just making sure that management's ability and experience is going to lend to the longevity of that relationship and that business as a whole. Also, the financial condition of the borrower, obviously that's a big thing when considering whether or not to extend a credit, and borrower's ability to meet obligations and service debt. What falls under that as well is, are they going to be able to keep their license? And then also collateral. Can you get your money back should the loan go south? And the big thing there, and we'll talk about that in the Illinois guidance in a minute, is taking the crop as collateral. That's a big concern that the NCUA guidance alluded to, but didn't get in as deep into as the Illinois guidance that we'll touch on in a little bit. So the next slide is our old friend, the February 2014 FinCEN guidance on banking true MRBs, true marijuana related businesses. So this guidance is pretty lengthy in nature. I think we've all given this a read many times, but it outlines, the core priorities, what FinCEN considers to be red flags that might create the need for you to file a priority SAR instead of the limited SAR, and also defines what those SAR categories are. And just as a quick reminder, a limited SAR is what you would file if you are banking a marijuana business, but you think they're on the up and up. They're a good business. They're not violating any of the Cole Memo priorities. None of their activity indicates a red flag as outlined in this guidance, and you're comfortable with them. A marijuana priority SAR is kind of the opposite. You're banking this business, they have violated a Cole Memo priority, they are hitting some of those red flags, and you're concerned about it. It's a true SAR is what you can akin it to. It's a true SAR where you feel like there's suspicious activity going on. And then the termination SAR, where you're just letting FinCEN know that you were banking a marijuana business, you're not any longer, and you can put the financial institution that they moved to in there should you know who that is. I really like this guidance, even in talking about other cannabis businesses that are not true marijuana, like hemp and low THC CBD, because the due diligence lines up really well as well. And then also the red flags, like we talked about a minute ago, 3 or 4 of those red flags are duplicated on the FinCEN hemp guidance. So they're good red flags really for any BSA activity, whether it's third-party payment processors, MSBs. You can change some of the words around and apply them really to any industry. They're just kind of the red flags of BSA in general. Things like excessive cash deposits relative to their peers. Is their transaction activity in line with what you would expect and in line with what other businesses are doing in similar geographic areas and doing similar activities? High velocity transactions, that's something that your transaction monitoring systems are looking for every day on all of your customers. So not necessarily specific to marijuana, but kind of fit everybody when you're doing BSA AML monitoring. So this guidance, it's dated, we're in 2020, that was 6 years ago. The industry has evolved so much, but there's no really talk about getting a new one. I think it's still working. So it's not something we can forget about. We've got to keep that, on the front of our brains. So we'll go to the next one. Really, the next 2 slides are older, non-specific cannabis guidances, but I think they're good to keep in mind. So this first one really just hits on the point that, it's the bank's decision what risk to take on, but their program needs to match that risk, and even further, the scope of your exam will match that risk. So the examiners are going to look at your risk profile, look at who you're banking, what your BSA program looks like, and then they're going to design the scope of their review of your financial institution by that. So they're going to look a little deeper if you're higher risk. And that's not necessarily a bad thing. It's just stating how they facilitate risk-based exams. Another thing that it highlights is that they really encourage financial institutions to look at individual relationships rather than just declining services to entire groups of customers as a whole. You know, the term that comes to mind there is de-risking, right? Instead of having a blanket policy statement, we will not bank any cannabis related businesses, hemp, CBD, marijuana, any of them. Instead, having risk-based procedures where you are doing individual due diligence on all customers and prospects and making individual risk decisions, because it's very difficult to say that all hemp customers are moderate risk or all marijuana customers are this risk, and instead having individual risk assessments for your customers. So the next slide is an older guidance that basically says the same thing, right? It came out when de-risking was all the rage, and it was the FDIC saying, hey, we don't want you to do this anymore. We want you to look at the individual customer level. Not every customer within a broader group has the same risk profile. So instead of just banning whole groups of customers, we would rather you look at the individual level. So that's something really to keep in mind, especially with the hemp and CBD, because it's impossible to have a blanket policy statement that says no cannabis ever, ever, ever. In today's economy, CBD is on the shelves in retailers across the country, local grocery stores, drug stores, convenience stores. And to have that policy in place and really abide by it and not get criticized, you would have to exit all those other relationships that I just named, like the gas stations and such. So it really is a situation now where you do have to assess every single customer individually. And I hope you guys have programs that are written in that way and that understand how broad this industry has become. So Jake, you can go to the next slide. So now we're going to go through some state guidance. I know that we have individuals from across the country on the call today, and if I don't talk about your state, that doesn't mean that there's not a state guidance there. This is just going to highlight the ones that I pay close attention to, that I felt like added a lot of volume or value, excuse me, or that hit on really good things. There are other state guidances out there. And some of the bottom two, the California Banking of Business Oversight and the CSBS, I'm going to pull up. Well, Jake's sharing his screen, technical difficulties, so I won't pull them up, but I'll link them to you guys after this, because those are ones you definitely want to have, you know, saved in your bookmarks in your browser. There's just so much good information in those. So we'll go to the next slide and we'll talk about Illinois first. So this came out last summer. So if you remember, that NCUA one was August 2019. And it was the first one we got, and to this day, it's one of the beefier ones. And the Illinois one came out in July, so a month before the NCUA, and it is beefy. It is so good. I had honestly had never read a guidance out of the Illinois Department of Financial and Professional Regulation before this came out, and I was just so impressed. So I look at a lot of their guidances now. But again, common to a lot of them, decision is a per institution risk management proposition. It's up to you. You're doing a risk assessment. It's up to your individual institution to decide whether or not you want to bank these hemp customers. However, if you do, you need to make sure that you understand the business, that you have the right CDD and EDD in place, and you're obtaining the right documentation from your customer. So they have not changed this guidance in light of last month's FinCEN, but if you look at some of these due diligence examples from last summer, they wanted their institutions to get all crop testing and check for enforcement actions. And FinCEN saying all you have to do is get a picture of the license, or have them check a box and sign at the bottom and attest to the fact that they are licensed. So the state of Illinois is requiring more out of their state chartered institutions, and I would recommend that this is more prudent risk management, but it's probably not appropriate for your low risk customers, right? So taking that low risk approach, if you're not subject to this guidance, and making sure that you're doing enough to ascertain that it's a legal business, and being in compliance with your federal and local regulations. And then it goes on to kind of outline what their examiners are going to be looking at, which this time last year, I was training examiners, and most of them really didn't even know the difference between hemp and marijuana. So for this, a year ago, to already outline, hey, this is exactly what our examiners are going to be looking for, was a godsend, right? That's what everybody wanted to hear. And in any other guidance, we really haven't gotten that. It's kind of, it's very, it depends on who you talk to, right? A lot of examiners out there are still really unfamiliar with the landscape of this industry, and a lot of them are still really unsure how their offices are going to examine it and handle it. But this was over a year ago, and they were already saying this is exactly how we're going to examine you if you were banking hemp. So it's a nice little roadmap for those, even if you don't, if you aren't chartered in Illinois. This one goes into some special considerations, the liquidation difficulty being the first one, meaning, hey, if you repossess this collateral, you can't sell it. You don't have a license in the state of Illinois that allows you to sell hemp. So that puts you in a sticky situation as a financial institution, AKA don't take their product, their crop, anything like that as collateral. Also, transportation. This is still very much an issue, right? There's a lot of sticking areas in the industry. I would say number one right now is smokable hemp. Number two is this transportation issue, and smokable hemp kind of overlaps with transportation right now. There are states where it's not legal to have hemp. They're few and far between now. I think Idaho is one of maybe 2 or 3, but there have been a lot of situations where they have seized large truckloads of hemp in their state. Again, if that is greatly going to impact the financial condition of your customer. So making sure that they have good logistics, policies, and procedures in place, and they know where they can travel, they know where they can ship, where it's not going to be to the detriment of their financial condition and their longevity as a business. Also, kind of along that same lines of thinking is the law enforcement issue, right? One of the main reasons that states like Texas are seeking to ban smokable hemp is because if a police officer pulls an individual over and they're smoking hemp, or they have on their person smokable hemp, it looks exactly like marijuana. It smells exactly like marijuana. And to the naked eye, you can't tell if it's smokable hemp. So it puts law enforcement in a very bad situation where they're unsure if this green substance in this car is legal or illegal, right? Can they arrest this person? Should they arrest this person? And it just complicates it. Until there are some kind of testing devices, there's not much that law enforcement can do. So the states are seeking to ban it. And because of that, if you have a customer in a legal state with smokable hemp, but they're transporting over an illegal state, it could get sticky, right? So making sure that not only they have good logistics plans in place, but also that they have gotten really firm and sound legal advice from an attorney that specializes in these things and have helped them design these types of things. Everything from what kind of licenses they need to how they can transport, where they can transport, making sure that your customer has a good compliance program themselves. Now, does that mean that it takes you 2 days, a site visit, and a read of every single policy they have in their book to do that? No. But it does mean asking the right questions when you're talking to them and making sure to make sure. So it doesn't have to be heavy due diligence, but just making sure that in the back of your head, you're asking the right questions to make sure that these things don't become an issue down the line. And then that last bullet, I really like the way they highlighted this. I mean, they essentially just said, hemp is not a controlled substance, right? And because of such, the risk of money laundering has been minimized compared to marijuana. So that in and of itself just lessens the risk presented to the financial institution. And I just really like the way that they worded that in that Illinois guidance. So Jake, we can go to the next one. Okay. So the Texas Department of Banking, this one is around the same time, July of last year. This is before the Texas plan was even in place. That came into place earlier this year. The Texas plans around registering CBD retailers still aren't in place and finalized. So there's still a lot of movement in the state, which makes the guidance still relevant, because a lot of the themes of this guidance is everything's in flux. You need to make sure that you understand the legal landscape. You need to make sure you know what department is even overseeing the customer or prospect that you are either doing business with or considering doing business with. You as a financial institution should consult legal counsel. You should have good and effective due diligence programs in place. KYC should be tailored to the industry, kind of like the guidance we talked about a minute ago, right? You know the legal landscape and you've adjusted your due diligence procedures for them in all the geographies you serve. So you need to know the licensing requirements, and then your due diligence program needs to outline what licensing documents or questions you're going to ask for each type of business in each geographic location. And then ensuring that you're filing the proper SARs and CTRs even, because that's what's going to get you in trouble in an exam, right? But this guidance really harped on the fact that the legal landscape is very dynamic and complex. And if you're going to open your doors to these businesses, you need to make sure that you as a financial institution understand that and understand it well. So go to the next one. This one will be a quick one. So this Kentucky guidance is old. It's from May of 2016, and you might be thinking, well, hemp wasn't even legal then, but it was. So Kentucky had a research program allowed under the 2014 Farm Bill, and when that started blowing up in the state of Kentucky, a lot of the financial institutions were looking to the State Department of Financial Institutions for how they needed to handle these customers. You know, from a logical perspective, they're thinking, okay, well, they have a license. They're being overseen by the state. It's not marijuana. Do we really have to call them high risk, or how are we supposed to deal with these businesses? And the Kentucky Department of Financial Institutions came out with this guidance. And effectively what it says is these are not high risk customers. And there is no expectation that you categorize them as such just because they're participating in a state-run research program. And I really like this guidance for that exact reason. And I think it applies to a lot of hemp businesses today, even outside of research programs. The state is overseeing these businesses if they're licensed. I'll put that caveat. If they're licensed, the state is overseeing these businesses. It is not your job as a BSA professional in a financial institution to police the legality of these businesses. But it is your job, and there is a regulatory expectation that you understand the nature and purpose of the customer relationship and that you have ascertained that they're operating legally. Past that, if they're licensed and everything's on the up and up and it's hemp and they're growing hemp and they haven't had any infractions, they don't have any enforcement actions, you'd be pretty hard pressed to call them anything other than low. I mean, a farmer or a cultivator, they're not going to have a lot of cash transactions. Their activity is not going to be all over the place. You know, it's going to be very seasonal and predictable. So keep that in mind. There is no expectation to call any of these businesses even moderate risk. You shouldn't blanket low risk them just because I said that, but just keep in mind there's no expectation to call these businesses high risk. So go to the next one. This one always makes me smile when I talk about it. So if you've been in BSA for a while, you know that the New York Department of Financial Services, the NYDFS, they've had some very progressive guidances over the last 5 years. You know, the BSA guidance in their state where you have to certify at the board level that you are managing your transaction monitoring system correctly. That was huge, right? Sent shockwaves through the entire industry. Their cybersecurity guidance is very progressive. And then you have this guidance where it's BSA, AML, and nature. And the department comes out, and the first 2 paragraphs, I think, go on and on about how much money the state of New York has invested in cannabis. And it puts numbers in there. And then it goes on to say, you know, because the state has invested so much money in cannabis, we want to work closely with financial institutions so that you will bank them. So it encourages banking them. It says, reach out to us and we will help you. and they really just want to support FIs to get these businesses banked since the state is so heavily invested. So it's an interesting, not swing from this regulatory body, but it's just an interesting guidance out of them. And I would give it a read, especially if you do business around that area. But it is nice to see a regulatory body writing a guidance in that manner, less prescriptive and more collaborative. Like, let's work together. We'll help you. We'll work with you, because we don't want these businesses to be unbanked. And again, I think I mentioned earlier that I would link the last two, but I can link all of these at the end of this session. I can get everybody the deck and I'll add links for each one in the various slides so that you can go and read the whole thing if you're interested. So the next one, this is more marijuana in nature. This came out last fall, and it's a really, really great guidance. I was going to share my screen with the guidance and walk through it with you guys before the technical difficulties, but I highly recommend pulling this up after this webinar. It's written as a questionnaire, and the intent of the Department of Business Oversight in the state of California, I mean, this is a banking guidance, but they wanted it to be written in a way that even the marijuana businesses could read it and see, okay, this is what my bank's doing, this is what they're looking for, this is what they have to do, really so they can be prepared for that relationship and be good customers for you guys. So I really like that take, and it even explains that in the guidance, that that's really their aim. But it's written as a questionnaire with 5 sections. And the first section is just overall program governance, right? How did you build your program? How are you auditing? Who's overseeing it? How are your policies and procedures working? That sort of thing. The second section is technical kind of stuff, like what kind of documentation is in the customer file? What kind of records do you maintain and obtain from your customers at an initial and ongoing basis? The third section is account testing and then identification of fence and red flags. And that really is your transaction monitoring and ongoing due diligence in that section. There's a section for your Cole memo priorities, which things like age verification, which can be a concern in the hemp world also, right? If they're selling CBD, are they checking IDs? And then your FinCEN filings, so those Sars and the governance over those filings, timeliness, things like that. It's really well written, very concise and to the point. And I think if you're banking any kind of cannabis, even if it's not marijuana, this guidance is written for marijuana. So remember that when you read it, but it can be toned down and applied to hemp as well. I definitely don't want you to read that and think you have to do everything in there for hemp, but it's just really well written and concise, and I recommend everybody taking a look at that. The last one that we'll talk about, so if you're not a state bank, you might not be familiar with the CSBS, but they are the Conference of State Bank Supervisors, and essentially they train state bank examiners throughout the country, and they create a lot of resource documentation for those examiners as well. They're a really great organization, and they have this Cannabis Job Aid. Now, I've seen, the first time I saw it was last summer, maybe last spring, 2019, and they keep it up to date so well. So it was last updated on August 11th of 2020. If there's any changes, they'll update it. It's a very lengthy document, so make sure you have the link and not a PDF, because they do update it so much. Keep that in mind. You don't want a stale PDF of this document because it's just too good. They have it separated into hemp and marijuana, which is really great. And there's links embedded throughout the entire thing. So there's a line in the matrix for every single state. There's also a section for territories and then tribal laws specific to cannabis. And they link everything. They tell you whether or not it's legal. They tell you the governing authority. And then at the end, they have some extra links, federal links, and then some other resource materials. So this is a really great thing for financial institutions to look at, because this was written for examiners to use when they're examining financial institutions. And it's beefy. There's a lot of information. It can be overwhelming, but it's very well presented. And it gives a lot of really great information at the legal level, like for understanding that complex legal landscape. this is a really great resource, especially if you don't want to bookmark 50 state links to their Department of Agriculture on your Chrome tab. So again, make sure you have this as a web page and not a PDF, and I'll link it after this session. So not a guidance, but a really, really great resource. So finally, common elements from all these guidances are very different in nature and purpose, but at the end of the day, really risk management is risk management. Whether you're talking about a high-risk third-party payment processor, a high-risk hemp business, a high-risk marijuana business, the way you operate your BSA AML program doesn't really drastically change, right? You need to have your risk assessment well done and up to date, and it comes first, right? What is the risk of this industry? What is the risk of this customer? Are we willing to take on this risk? If we are, what are the controls that we have in place? A bunch of the guidances we talked about reiterated that you should be assessing risk at the individual client level. So your BSA AML risk assessment, it's going to assess the risk at the industry level, right? You're not going to have a line in your risk assessment for every single customer. Your overall risk assessment is more aggregate in nature. But for the customers, you will have each individual client individually assessed. You're not just giving a blanket risk score to all of the cannabis businesses in that bucket like they're exactly the same, because they are wildly different in nature. This is a very, very diverse industry. Second, verifying that your business is operating lawfully with a proper license and or registration. So part of that is just knowing whether or not they need a license or a registration, which Fairleaf can help you with. And with the FinCEN guidance, the most recent one, they're saying you just have to get a picture or have them attest, unless they present an elevated risk profile, and then there might be more documentation that's deemed appropriate. So your policies and procedures should outline when more documentation is appropriate and what that documentation is for different types of businesses. Your program needs to be commensurate with the complexity and the risks. So that kind of goes in line with the one we just talked about, proper CIP, good CDD and EDD, and filing Sars when appropriate. And that should all level up depending on the risk profile of the customer. And then finally, staying up to date with laws and regulations. This is really, to me, the biggest challenge in this industry right now, banking them or even being a participant in the industry. The laws, because the industry is so new, the laws are ever changing. Every single day something changes. Texas smokable hemp was deemed illegal, and then the next day a judge blocked them from enforcing that. And I mean, it's just insane, right? So I would recommend maybe getting a summary email every Friday, because if you try to keep up all day, every day, you'll be making yourself crazy. But there is an expectation that the institution is aware of changing laws and regulations, whether that's through an attorney or a service like Verily that helps you know what you need out of each customer in different geographies. And that's all I have for you guys today. I'm so sorry about our 10 minutes of technical difficulties. I will make sure that these slides get out to you guys with links to every single one of these guidances that I talked about. And please submit suggestions for webinars in the following months. They don't have to be banking cannabis in nature. It can really be anything, and we'll sift through those and decide which ones are best for Verily. We just want to make sure that you guys are getting value out of this webinar series, and we will continue to do them monthly for you. Thank you so much for coming, and we will see you in September.